Hey everyone, welcome back to the Mark Loeffler Experience. We got our good friend and friend of the show, Andrew Hines, back. Welcome, Andrew.
Thanks for having me.
We're going to tell you what's going to happen in the real estate market in the next month.
Couple months?
Couple months. What happened in the last month? What's going to happen? We're going to make our predictions. And so far, Mark's fall predictions are coming true. If you haven't watched that video, we're going to link it down below because pretty much what I said is coming true.
Recap me on what you said.
Basically, I said we're going to start to see a rising inventory level, which we are, yet it's not going to rise enough that we're not going to see a price increase. So we're going to see more buyers come back to the market than we see sellers, and which is definitely happening. Prices are above their all-time highs again. It took a little bit of a lull in the summertime, and basically everyone went on vacation. They're like, hey, COVID's over. We can get out, we can go camping, we can go vacation, we go to cottage, whatever. They went to the restaurants, but they weren't shopping for houses. So if you bought a house this summer, you're probably already up 5%.
Oh yeah. So to your point, Mark, I do see a couple of things that contrast that a little bit. We've seen a normalization in several markets where they're kind of following that fall cycle. Prices are coming down even a touch in a few key Canadian markets. But inventories are down and among all-time lows.
Yeah.
So I guess the question is, how consistent is that across Canada? And where do we expect to see that more or less?
I've always hated that.
Yeah.
When you see, Canadian stats. And why it bothers me so much is because, to be honest with you, there's like 3, 4, maybe 5 major centers that just obliterate all the stats.
Yeah,
like that they are the stats, and then everything falls in.
Everything follows them, right? You've got your large scale markets, your Vancouver, Toronto, Montreal, and then of course East Coast, Halifax.
But that's, Halifax is smaller than Hamilton, right?
Oh yeah, it's a small city. But for instance, Hamilton, their prices are still relatively much lower than our Ontario prices. But they have like 0.6 months of inventory right now, and they've just been in an inventory crisis forever.
Yeah,
I think Toronto is now below below the 5-year average for inventory levels.
For sure, yeah.
So, we can have less sales, but we're still seeing prices up.
The only places I saw that actually gained inventory month over month was out west.
Yeah, they're more balanced markets in Edmonton.
Well, they're closer to a balanced market.
Yeah.
I wouldn't call them balanced yet, but they definitely are closer to them for sure.
Mm-hmm. What did you see in Vancouver?
The inventory had risen in Vancouver as well, but again, it's nowhere near anything it needs to be normal or to be a balanced market.
This is the thing, I think a lot of people are trying to question, do we expect to see a crash? Would we see a crash, and what would the implications be? It's just hard in my mind to imagine, even if we start to see prices come down a little bit with all that influx of immigration this year and next, we're probably going to keep seeing, even if it does correct a little bit, come back up. The only wild card, and I'd be curious to hear your thoughts on that, is the institutional buyers and what percentage of our markets those make up.
This is all anecdotally, but I'm hearing pension funds buying big swaths of properties up north, hedge funds and insurance companies buying apartment buildings and commercial buildings, and they're not stopping right now.
Right. So it's like being on eBay and you're trying to compete for that blender and you got like 20 other people. Well, now we've added in all the institutional to compete for that exact same thing.
Yeah, it's not like the States that they're going and just picking off single family homes.
Yeah,
right?
You haven't seen that here yet.
They weren't doing that there. They were going to the banks and saying, hey, we'll buy your whole thing off you, your whole book. That's not happening here so much. Well, it can't happen here because of our banking laws. The banks have to, even if they foreclose, get fair market value for the property. They don't have to do that in the States. The States,
they can foreclose in the States, right?
You owed $100,000 on this $400,000 property. Great. We'll take $100,000 for it. No problem.
Yeah.
They're under no obligation to get fair market value.
Yeah, I think that's Ontario specific though, right? The power of sale. I think some of our provinces do have power foreclosure. Here, do they not?
They have foreclosure, but it's Canadian Banking Act.
Okay.
So they're still under obligation to get fair market value for the property.
Okay. Now, when they get that, though, do they have to give the money back? Because I know with power sale, you give the difference back to the owner. Okay.
Yeah. So the problem is it's too onerous typically to take it for foreclosure. You can. Yeah. And I've known some private lenders who've done it. But for the most part, it's been power of sale. I guess the question is, and the question I always get is, should you be investing today?
Yeah.
Are we going to wake up in 6 months and be, hey, I'm 50% down on my property, right? I'm over if I'm 5% down on my property. Yeah. It's that meme going around is millennials waiting for the real estate market to crash.
Yeah. Here's a point that I think we should really look at is Japan, real estate goes down in value. And that's been pretty consistent for, the last 20 years. They had their boom, they had their high inflation, and then they had their real estate market start to stagnate and go down in value. But a big difference from Japan to here is, for one, immigration.
100%.
Like Japan, they don't immigrate.
Nope, there's no immigration. It's it's the most monocultural country in the world.
Yeah, they don't want people coming in there.
They have expats there.
Yeah,
but you go there, you work, and then bugger off.
Right. So I think anything's possible, right? We could see a 50% correction. So say you're that homeowner that buys and then it goes down 50%. Well, you finance it with a mortgage. You most likely still have your job. You can still make the payments. What are the factors that are bringing you back up? And immigration's the big one. And then the massive unprecedented money printing's the other.
Yeah.
And people are going to need a place to live, right?
I honestly, in my opinion, I don't think we're seeing, a 50% crash.
Oh, no, I don't think that either.
Okay.
But I'm saying even if that's your worst case, right? Even if that's your worst case.
Well, my aunt bought at the top of the market in 1992.
Yeah.
Right? Or whatever it was. I don't remember. Anyways, they bought it pretty much at the top of the market. It was a $200,000 semi-detached at Main and Danforth in Toronto.
Yeah.
And, they lost $60,000 off that property in the first couple of years. And then, they continued to pay their mortgage. They had a job, continued to live there, raise their family. They sold it 30 years later for, $800,000.
Right.
Fully paid off.
Yeah.
Right. And it's, at some point it's time in the market, not timing the market right?
Well, I think it's really always that, at least in our conventional real estate market. So, great point. I think the main thing comes back to, if you're buying out of panic and stretching yourself to a point where it doesn't make sense, then it's not the time to buy. But if you're buying and saying, I can handle this regardless of what happens, and I'm willing to stay here, I think those things are the satisfying factors.
Well, if you're an investor and you're buying cash flow properties,
that's even better. Yeah, that's where my heart really is. Just buy where there's cash flow, and who cares what happens to the values?
Yeah,
you'll pay down, and yes, if you ride the roller coaster, you'll eventually come back up, right?
Well, I've done this on the channel. It's been a long time, but I have the where I go through the scenario of you buy a $250,000 property, I call it $500,000 now. You break even, you don't make any cash flow over the whole time, and there's no appreciation.
Okay.
Right? So you put 20% down, so call it $100,000, and over 25 years you pay off the mortgage.
Yeah.
Right? And so you still get a 400% return over 25 years.
Yeah, absolutely.
Right? And that's with nothing else.
Yeah. This is why I've never understood passive stock investors, because I get it when you trade and you get into options and all that, that's different. But just people who just set it and forget it, and maybe they get 5 to 10%. With real estate, with the leverage, man, people are making absolutely insane numbers in very short periods of time.
Yeah. Only thing I say is, and I was talking to somebody this morning about it, is, okay, you're 100% in real estate.
Yeah.
Your income, all your income, your active income, you're flipping, you're burring.
Yeah.
So everything you have is in real estate. I'm like, you need to just, for, worst case scenario, go throw something in just a Vanguard ETF.
Yeah.
Keep it simple, low fees, and you need to put something in there. You need to drip that every month.
Just to be diversified, yeah.
I woke up one day and I looked at myself and I'm like, I'm 99% net worth in real estate.
Yeah.
Sometimes that's a little scary, right?
Yeah.
So it's like, okay, what can I do now to get it to closer to 50-50?
Right.
And the problem was I kept buying real estate. And it kept adding to the net worth, and then I had to work harder on the other side. But anyways, what do you see happening till the end of the year?
You know what? I don't see anything changing. I think we're going to keep going. I think we're going to see another 5% potential increase over the next several months.
Well, so I said in the September video, 3 to 5%.
Yeah.
I thought 5%. Honestly, I don't think it's healthy to have these 30 to 50% increases. Like it's nobody knows what to do in this market.
I think we're 5% to the end of the year across Canada, potentially. Some markets for sure, some not, of course. Like Edmonton, like I think they were 5% year over year. Like I
don't think they were that high.
Yeah, it wasn't that. It wasn't a crazy year, which I mean that makes it such a good opportunity.
Go oil prices. Let's get Mark's apartment buildings to double.
Yeah, they're on their way
in a year. That'd be great.
Yeah, so I think we're potentially the 3 to 5 to the end of the year, and then next year, oh man, God only knows.
So I mean, you look at it and you say, okay, interest rates are going to probably go up in the beginning of third quarter. That's what they're talking about. So maybe if we're strong, which we had a very strong jobs report, and we know that there's a lot of people hiring out there right now. Listening to the radio, driving around town, you can hear it, right? And that's one of their factors that they're looking at. We've gotten back all the employment. We're not at full employment that we were, right? Because we've added people. I mean, I think even if it goes into second quarter, I still think we only see 2 rate increases of quarter points next year.
Right.
They're not going to go gangbusters.
There is the wild card, though, if the supply chain issues that are happening now affect different companies. I know the Ford plants had to shut down because they couldn't get microchips. What allocation in our predictions are we allowing for things like that happening, those wild card events that would affect and cause people to lay off employees because they can't produce?
Stay tuned, because we have that separate video coming on Monday.
Yeah.
for the supply chain issues, what we think is going to happen, and what's causing it, and all that fun stuff.
Yeah. Well, we don't even need to get into why. I'm just curious, is that going to be an effect if it were to happen? Where are we going to go? Or do we want to just save that for the next video?
We're going to save that for the next video. I mean, at the end of the day, should you buy real estate right now?
Isn't the answer sort of always yes, as long as it meets your fundamentals?
Well, the answer is always, the best time to buy real estate was 50 years ago. The second best time is today, right?
Yeah.
If you buy good cash flowing real estate, or if you buy a good property that you can add value to,
and you're willing to stay in, if it's your home, you're willing to stay there. Don't buy something you can't stand to live in more than a year. I personally don't think that's a great idea.
If you have a long-term focus, you're always going to win in real estate. If you have a short-term focus in real estate, you might get burned. So if your goal is to buy a house today and live in it and flip it in a year, just for market appreciation, I still think you're going to be okay, but you're not going to be as good as you were a year ago.
Yeah, I just look at that as, what are your contingencies, right? If you're buying something that could easily be converted into a rental if the worst did happen, then you just ride it out. You just refinance it, rent it out, wait till the market comes back, and then you can sell it. So I love, if I buy something, I want it to have that kind of exit strategy if I need it. Yeah. And as a homeowner, you don't necessarily have that, but maybe if you have a little extra cash and you can afford to buy another place, as long as you're making sure you got those contingencies, I think you're all right.
Thanks, everybody. Andrew's prediction, buy as much real estate as you can. Catch you next time. Like and subscribe.